What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 3rd of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we're going to be talking about a little-known data science model that could be the key in answering as to whether or not we're at a discount range and ready to really start moving higher in Bitcoin's price. We're going to be diving into this model as well as other metrics that back up this claim and many other things as we go through the video, so let's not push it off any longer, guys. Now, as you all know, we've been talking a lot about the importance and significance of the higher lows in Bitcoin's price. And now, for the third time, we are coming back up to this range here around $44,000. And we have to see whether or not Bitcoin can break through this short-term resistance that at the beginning of January, as well as the beginning of February, served as resistance. So now here in March, we have a third attempt. And if we can see a catalyst break at above here and then a retest back up here towards the relative all-time high range around 65 to 69K, things could really start to rip higher. But are there any models or sources that we can utilize to gauge whether or not the market is ready to make that move higher? Today, we're going to be talking about an old data science model, a legacy model in the crypto space that ironically enough has been becoming growingly relevant in regards to analyzing Bitcoin's price. It's become more accurate over time, which is usually the opposite of most data science models. Today, we're going to be taking a look at what is known as the Mayer multiple. Now, I've got it up here on the chart here, and as you guys might have noticed, I've removed my webcam for the sake of this video, and I want to ask you guys if you think that'd be better just to keep the webcam off so it doesn't get in the way of things. So leave a comment down below if you agree or disagree on that. I'm totally open to your guys' feedback. But what we've got here is the Mayer multiple. And the important thing to understand here is that all the while, like a lot of models that can look complex, the Mayer multiple, ironically enough, is one of the simplest data science models out there in the market and utilizes a cornerstone metric that a lot of people who do technical analysis like to utilize, especially those who are swing traders or more long-term investors. And that is the 200-day moving average. Now, to put it simple, the 200-day moving average is the summarized close of the past 200 days averaged out, all right? So it takes the closing price of the last 200 days and averages it into a single metric relative to the trading day we're looking at. So, for example, we can see here that over time, as we go here towards March 3rd, the most recent metric, the 200-day moving average is $49,175. It's the orange dot you can see there on the chart, or the orange line that's moving over time. But the $49,175 metric is the 200-day today. And as you can see over time, according to the following 200 days of each trading day, that metric will change over time. So we've talked about the 200-day here on the channel before. It's pretty well known in technical analysis. But what Trace Mayer, the founder of the Mayer multiple, did, he's a legacy personnel in the crypto space, or legacy contributor to the crypto and Bitcoin space. One thing that he noticed is that with Bitcoin's price utilizing what's known as Mayer multiples, or basically ratio multipliers of the 200-day moving average, we could start to get a really interesting band here of when Bitcoin is at a discount and when Bitcoin may be overheated. And again, ironically enough, it's become more and more valuable over time within the crypto market, especially in this cycle where we've had heightened rallies in the short term and heightened corrections in the short term as well. So let's go ahead and start diving into how we can make use of this model. It's one thing to be able to track price against these Mayer multiples, but what makes it a lot easier is analyzing the oscillator on the bottom hand part of the screen. Now generally, when we're stepping above the pink line on this chart or below the green line, the oscillator will indicate that to us. It's a measurement of where price stands relative to the multiples over time. And again, as you all can generally probably sense here, when we're below the green line, that's usually a time or an indicator that price is oversold and that it's a time to get bullish on Bitcoin. Not only due to the fact that price not only tends to trend higher afterwards in the short term, but really over the next preceding months, it's likely that after it dips below the green, soon after it is set to go up towards the pink band, which is generally where markets are overbought, and it might be time to start looking to take profits or chips off the table, so to speak. We can see here now that price has had a healthy correction back down below this green range here in February of this year. And it's very similar to what we saw back here in July of 2021, right before prices started to spring higher. On top of that as well, we've seen this not just here within the past couple of months holding relevancy, but on top of that as well, holding relevancy back here during the March correction, where price had pulled back extensively due to the pandemic. And on top of that as well, we had prices pull back here from the peak highs, or the relative highs here around 14K back in July 2019, down here towards December, right? Just like back over here, we've had 2 retests below the Mayer multiple, and then we were setting ourselves up to spring higher. It's exactly what we saw back here in November 2018 and June of 2018 as we went into the bottom of the bear market. So what this is showcasing here is that no matter if we're talking about cycle tops and cycle bottoms, really like the peak of the bull market and the bottom of the bear market, or we're talking about mid-cycle corrections or rallies, the Mayer multiple is becoming growingly relevant towards analyzing the crypto space. And it's really interesting to see here how much it's playing a role in helping us to determine whether or not Bitcoin is at a discount. Now, of course, nothing is foolproof here, right? Again, just because the Mayer multiple drops here below this range doesn't mean that it can't revisit it or it can't go lower in price, okay? I don't want to sell it like that, but we can see consistently that the odds are in our favor here when it comes to the Mayer multiple coming down to this range. So it's generally a healthy range where we can start to dollar cost average or build positions, and it's definitely not a period to start getting fearful of the market. And that's another thing I want to emphasize here, guys, because as we talk about on the channel all the while, we love data science models like the Mayer multiple and many others that we track here. It's important to understand here what the market's really doing right now, especially as we're establishing these lower highs. If you dive a bit deeper into the metrics, and one of the tools I like to use is Bookmap. They're a new partner of ours here on the channel, as I love utilizing the tool here to understand some of the in-depths of market price. Although while it might look a little bit overwhelming, Bookmap does a great job of understanding the 2 things that really dictate where price is going to go. Market order flow, are more people market buying at the best price or market selling at the best price? And on top of that as well, understanding where the order book stands, the bids and the asks that will restrict price being able to climb higher or lower until they get filled by market order flow. So these are the real things that dictate market price. There's tons of indicators out there, but none of them really give as much insight as these 2 metrics, right? So the heat map here is able, in these kind of lines that are changing over time in correlation to price, indicate here that there is going to be some resistance here likely in price until the market order flow is able to circumference, in this case, or basically surpass these limit orders or asks on the order book. We can see that it ascends as price gets higher, as well as ascending here on the bids when price goes lower, right? There's more and more buyers as the price expands either direction. Now, one thing that I want to point your attention to here is the CVD here in this case. This is the cumulative volume delta, and it helps to give us a really good amount of insight as to whether or not the bulls or the bears are in the lead here. Are bulls more eager to buy in to the best available price in the market, or are they more eager, in this case, existing holders, to sell their positions to the best available bid, person who's willing to buy their Bitcoin at that given price, right? And we can see here that over the past couple of days, since back here in the 28th of February, expanding as far back as we can here within Bookmap, we can see here that since back here on February 28th, the market order flow has really been taking the charge here. Even though there's been some solid resistance here in the limit orders, the limit order resistance has started to shrink over time. And the market order flow has been establishing higher lows and testing up towards its highest level we've seen in the past couple of days. This is a really good indicative sign here. And again, why I emphasize the higher lows and the higher highs in market price as a clear telltale sign that markets are ready to likely move higher here in the near term. Unless something dramatic changes here, maybe the limit orders or the bids for buying Bitcoin, if you will, start to fade off the order book, that might be a worrisome sign here that people are waiting for lower prices before getting those bids filled. But the market order flow is a clear telltale sign here that prices are likely going to start charting higher. Now, if you guys are interested in checking out Bookmap, there's a free web-based version that you guys can give a try. And on top of that as well, you can check out the link down below in the description if you guys want to support the channel and potentially get one of the different paid plans they have for Bookmap. It's a really cool tool. I've started to fall in love with it because it just offers a lot of things that you just can't get through TradingView. Not only things like the heat map, but more importantly, the CVD in this case. The cumulative volume delta to really get a really good up-to-date picture and high-level data overview as to where market price is heading. And we can see that here as well with the volume dots, right? Those big market order flow changes here, where buyers are coming in, filling the limits on the order book, and again, not waiting around for price to decline in order to get their orders filled. And this is the same exact scenario here when we take a look at Ethereum, right? We're seeing strong CVD action here when it comes to the market order flow. So again, we're going to continue to keep an eye on this here when we're doing our TA here for the market, but I want to go back here and talk a little bit about some of the key metrics that we focused on here, right? This Mayer multiple, right? We can see here that it's not only the resiliency in Bitcoin, whether it be through technical analysis and the data science models, but we can see here, like we talked about the other day, in the overall market cap. Crypto market caps have shot up about in total $300 billion from the relative lows here in February, and have continued to ascend potentially up to $400 billion from the lows back here in January. These heightened lows in price are a telltale sign that the market is ready to trend higher and set a third higher high here in this case, similar to the ones we saw back in May and November. And if we can generally make some range here around 2.5 probably to 2.75 trillion dollars as new support, we can continue to climb up on our estimated trajectory here that price would revisit, or not revisit, my apologies, would visit new all-time highs here for total market cap around 10 trillion going into the beginning of 2023. We've basically been predicting and calling, as we've been believers in the expanding cycles, of the idea that Bitcoin is inevitably going to revisit this visit up to this 150, 200K range. And on top of that, not only that's going to likely happen in November, but soon after, in the following months, we are going to see an altcoin cycle peak as liquidity, as it did back in 2017 and 2018, it's going to circulate from Bitcoin into altcoins, and people are going to be taking more and more risk during the euphoric period of the blow-off top of the market. And this really is a pretty conservative ask, not only when we're considering previous cycles, but also in the short-term rally here that we're asking for. It is much more conservative than what we've seen back in the past during this cycle. Now, if all that wasn't enough here, the fact that ETH against BTC is still continuing to build up here, all these things are starting to compound here. While the market is silent right now, the market is obviously concerned about whether or not the trend is strong. We can see, whether it be the Mayer multiple, whether it be the market order flow, right? The lack of resistance on the order book, the resiliency in price to fill into those asks on the order book. We're seeing clear signs here that the market is remaining silently optimistic, that the institutions, as they tend to do, are accumulating very quietly. They don't want to just go ahead and go crazy overnight here and drive up prices. They want to be able to see if they can play tango with price. They want to be able to see if they can get an optimal amount of positions before price really starts to surge higher and the euphoria starts to kick in. And I don't think we're too far away from that over the next coming weeks. But one thing I wanted to share with you guys as well, if you're someone like myself who just likes to think more long-term and you're not too worried about the day-to-day price action, one thing I wanted to share is our sponsor for today's video, which is iTrust Capital. So iTrust Capital is a crypto IRA platform that allows you to invest, maximize your contribution of $6,000 to $7,000 into a crypto IRA where you can buy Bitcoin, Ethereum, vast majority of the favorite well-known cryptocurrencies out there. And what's so great is that you can defer your taxes by investing in the IRA. So you won't immediately owe any income tax or any capital gains taxes, even if you want to materialize and sell your profits well into when you go into retirement at a much lower tax bracket. So if you guys are interested in learning more about crypto IRAs and why it's important to maximize your contribution to IRAs if you're in the United States, definitely check out the link down below in the description. Thanks to iTrust Capital for making the video possible. And again, something that I really think is helpful for a lot of people. We're not big here on promoting a lot of the leverage trading, a lot of the crazy stuff going on. So I really think that iTrust Capital is a great platform, and I think it would be valuable for you guys. The last thing I wanted to ask you guys about real quick, if you're interested in a chance to potentially win up to $1,000 of Bitcoin, my startup DigiFox is doing a $1,000 Bitcoin giveaway. And it's for those who are participating within the Get Paid in Crypto beta. One lucky winner will have the opportunity to win up to $1,000. So if you guys are interested in participating in that, or just interested in the concept of getting paid in crypto, you guys can check out the tweet down below in the description. It's a cool giveaway we're doing here, and I think overall it's a great opportunity for those who want to take that step in towards making crypto an even more mature asset class by really receiving it as a form of their income to help solidify the stance of cryptocurrencies and where they stand for us as Gen Z, millennials, also Gen Xers as well, who are big fans of crypto and really believe that this is a new way to get paid. So on top of that, guys, I want to go ahead and wrap things up here. I hope you enjoyed today's video. If you liked it, drop a like, consider subscribing. And most importantly, whether you agree or disagree with the narrative that I've tried to share here today, feel free to leave a comment down below as to what your thoughts are. If you guys enjoyed this video, if you could tolerate my rambling, or if you guys have any candid feedback for me, as well as whether or not you guys like having the webcam on the videos. But that being said, everyone, thank you all so much for watching as always, and I'll see you all in the next video. Take care, everyone.